Hey guys, Jason here for Chart Guys. If you did not watch the Netflix video yesterday, I encourage you to go back and watch that. It looked very strong heading into the close, and we had almost a perfect setup. The only problem was we were overextended on the hourly time frame, and that's where we're going to spend our time today talking about that indeed. 270 297.43 was an hourly resistance that we looked at yesterday, and we broke over that level, back tested it, held as support, and then we got a high at 299.47. I exited my positions at the end of the day yesterday. Although we were in a nice daily uptrend and things are looking great on the daily time frame, we are just overextended on the hourly. And if I want to get into a nice daily breakout, I don't want to already have the hourly bulls tired. You need to see some consolidation, you need to see a higher low, and then you need to get up to that entry. Ideally, we get a nice bull break on the daily with healthy RSIs and levels on the hourly 4-hour time frame that gives us the real estate and the energy and the room to move in a nice healthy direction. That's where our profit comes from. So early this morning, we see weakness. We see the loss of some key levels. We expected this hourly consolidation, and I was looking for an hourly higher low over 291.97. We didn't see that at all. So what I was watching for was weakness. Out of the gate, we have a 5-minute lower high, a 5-minute lower high. We break through that 291.97, which changes that hourly trend. We no longer have hourly higher lows. We see a nice bear flag and continuation to the downside. So ultimately, we come down to 286.60. If we go back to our daily time frame, where does that come from? That is the low of day over on September 12th. So going back to our 5-minute time frame, we're getting down to that daily level. We've blown through hourly support levels. We're now at a daily level. And I'm watching this and I'm looking for some sort of strength because what we're doing is scouting for reversals. Now, I'm seeing this range, and I know we're bearish, but I'm getting this tightening range here. And we pointed this out in the chat room, and it was pretty fantastic. Here is a nice descending wedge. So that is showing that tightening range and that spring being loaded. Finally, we get a breakout. We get a nice 2-hour higher low, and then right into FOMC. So we had a good opportunity here for a short trade, 2-hour higher low, and ignoring FOMC, great technical setup. Although there is still money to be made post FOMC, because if you're watching SPY, you knew that it was largely a non-event. We set a couple of key levels, 287.45, 287.52. Things start to calm down a little bit. Bears make another move. We hold 287.52. And finally, having established that support, bulls are confident again, and they take off toward the end of the day, having set what hopefully is a 4-hour lower high. And now we need to see if bulls are going to come back and set either a higher high, or who knows what they're going to do, but we're going to get up here and right now hopefully turn what is so far just an hourly bounce into something else. And in order to do that, the bulls need to get back up over 290.44. They need to establish a higher low above today's low, which is currently looking at 287.45. So if we zoom in, what that will look like is to come back down, and it's okay to be rejected from our EMA 12 at this point as long as we set a higher low and start building that healthy trajectory, which should take us on the daily time frame for a more healthy, sustained approach to a break over EMA 26, and finally a break above 301.55 for more long-term upside moves. All right, guys, we're looking at Apple now on the daily time frame. Apple had a very nice day. The only thing we need to be considering is that Apple is getting to be extended on multiple time frames, so to expect another day like today is unlikely without some consolidation. So let's look at some daily resistances. We don't have any really until 226.42. So nice big range for us to go through. That's why we're going to rely on those RSI levels and sub-time frames to try and determine where we're going to find a little top. And they don't really identify the exact area, but this is where we start to look for trend changes. And you can go and look at today's Netflix video, which discusses yesterday's Netflix video, which is going to be sort of in the same scenario. So we did break over to 2079, which was great on the 5-minute time frame. It did come into account a little bit in some areas of support and resistance, but this could just as easily be coincidence. So we're just going to get rid of it. We're not going to talk about that anymore. It doesn't matter. We're going to go to the 4-hour time frame and look at what's going on. So there's a potential here for a 4-hour equilibrium to 216.30, and really a 4-hour, it could be anything. 4-hour higher low, set a new lower low, or if we get a lower or higher low, that's going to be that EQ. So to reiterate, because I may have confused everyone, including myself, if we come to 216.30, find a lower high, we have one of two things can happen. One, we're going to set a higher low and coil that range up, or what will happen is we will come down instead of new lower low and get into a 4-hour downtrend. But what we are expecting, given the fact that our RSIs are overextended, because on the 4-hour time frame we are at 64.03, and we see what happens last time we got up into the plus 70 range, we want to see a nice rounding and consolidation. Oh, so on the 4-hour time frame, we are not really in anything. Well, that's not true. We're in a 4-hour higher low pattern and a higher high pattern, with bulls needing to prove that by getting a break over 226.42. But as we said, we are overextended in a lot of time frames. So let's see what the hourly bulls can do. We don't really have any 4-hour higher lows, so we are going to need to check the hourly to see what's going on. And we're getting into a little bit of volatility today because of the FOMC. But we are going to play the levels anyway. We've set our hourly higher high. Our RSI is almost at 70, so again, we need to see consolidation. And on the daily time frame, the hourly time frame, our last low is 219.44. So yes, this was a knockout by the FOMC reaction, and maybe we'll find some support at 220.05. We won't know until we get down to that area and check out the 5 and 15 to see if we're getting any trend change action or any sort of bull volume. But right now, we are opening the door to an hourly trend change with the loss of higher lows. We still have higher highs, but we need to see if we are going to continue to set a higher high if we come down, consolidate, and then continue the trend like that. So there's a lot up in the air right now. The major story that I want to convey is that we are extended on a lot of time frames. 15-minute is at 67, hourly is at 67, 4-hour time frame 64, daily time frame 64. So we're getting pretty overextended. I want to see some consolidation. Other than that, Apple looks good. So we'll check the 515 during the day tomorrow. Look for some sort of sign of pullback. If we get a nice little bump early in the morning and we see a slow gradual climb, and then we get a 15-minute trend change or even a 5-minute trend change, that might signal where that hourly top is in, and we can start looking for some short positions, hoping for that to set. Hey guys, Jason here for TheChartGuys, taking a look at Amazon. Amazon is a bit of an oddity today. We had a nice inside bar setup. We pretty much immediately broke in pre-market or after hours. We broke out of that inside bar with a big pop to 18.27, and then we failed to get a higher high in either pre-market or initially in the morning over to 18.23.99. So what that tells me is that both this inside bar is going to be negated. Bulls didn't have any follow through, and when they did have an opportunity for follow through, they set a lower high on the 5-minute time frame. So that says, you know what, inside bar is gone. Let's get rid of that. Actually, let's just clear our charts. Now we're going to be focusing on some key support levels. So I'm going to be looking to yesterday's low point, which is going to be 18.15.61. We set a higher low with our low of after our pre-market at 18.16.01. We knocked that out. We rejected from EMA 12, and then it was pretty much game over all day. We went down, broke our support from yesterday, which was, where is that guy? Let me mark that in. 1804, back to the 5-minute time frame. We came down, bounced off of it, still rejected all day from EMA 12.26, eventually setting the low day. And then I can't quite explain what happened here. It wasn't really a technical setup that I was watching, but we had a lot of bull volume come in really, really quickly toward the end of the day. And this is what has thrown me for a loop. Admittedly, I'm tracking the action here. This makes sense. This part doesn't make sense. And you know what? Sometimes technical analysis just doesn't explain everything. I sent a message over to my buddy Dan, who you should probably know if you're watching this channel. And he took a look at it and he said, you know what? I don't have time to look at this in depth. Obviously, it's a little bit screwy. And we'll see what he says. And I'll weigh in tomorrow if he gives me any feedback that correlates to tomorrow's action. But right now we have an expanding range. The daily candlestick shows a lot of indecision and volatility. We do have a couple of key levels to look out for. I'm going to be looking at 18.25.69 for a key resistance test. And I'm also going to be looking for 18.23.99 for resistance. And today's low of day 17.95.50 for a support. And the reason I'm picking those levels is because it's a important high of day, and a support level, basically the furthest the bulls were able to exhaust themselves today on the bear side. Looking to the daily chart, bears don't have any support until they're down here at 1764. So it'll be very, very interesting. Tomorrow's action should give us a little bit more insight, I hope. Currently, bulls are in control of the 5-minute time frame. Lots of momentum going into after hours. and we'll see if they can carry that into tomorrow. Keep an eye on these resistance levels, and if we are able to get over those, we might be able to march our way back to some daily highs. And until then, have a good day. Hey guys, taking a look at Tesla. Tesla's potential bull flag is getting a little extended for me. I don't like to see so many candles away from the run up, because that to me says that the momentum that was here that we're relying on for continuation is maybe not there. We had a nice day yesterday. We had a nice potential move. While we did have a nice move today, we gave a lot of that back. And if we had closed up in this area near high day, that would have been great. I would have been okay with what I'm seeing. But this profit taking says to me that the momentum that we relied on for this bull flag, the pull aspect, is not there. So I'm going to rely on the short-term information. With that said, we have daily resistance at 248.45. Today's high was 248.17, I believe. 248.17, so that is a zone of resistance we need to keep an eye on. If bulls are able to get rid of that, then we're going to take a look at the next guy, which is over here at 253.50. We do have low day support, and we have established a little bit of a trend change. I can tell just by the way these candles are set up. Support at 243.37, 240.37. So an exact $2 spread. That's kind of interesting. On the 4-hour time frame, we struggled to set a new higher high on the 4-hour, but there's that resistance, 248.45, and our high from this candlestick on 5 a.m. September 6th, 248.24. So just ever so slightly lower than today's high, or higher than today's high of day. We did attempt to establish a 4-hour higher low over 240.37, so we might have this little nice tightening range for us on the hourly time frame. We can see where that comes into play. Rejection of 248.17, loss of hourly higher lows, established at low day support 242.37. So now we really need to see what the bulls are going to do. For me, the most important thing right now is the overall direction. I'm going to be looking for a break at 248.17. I want to get over this zone of resistance, and then I also want to see us do that with conviction, backtest it, and then see how far away we are and how the RSIs look and all those time frames. Look for an extended run to 253.50. Should we fail to do that or see another pullback, we're going to rely on those hourly time frames. We may come up and test something like this, get another rejection, a higher low, another rejection, and then in each case, it's just a matter of watching those hourly supports as they're established. Once we reject, do we break that hourly support, change the trend, and then look for more downside action? So to reiterate, Tesla, bulls not quite showing up in the way that I want them to. We really need to get over 248.45 and 248.24 and 248.17. That zone of resistance needs to go. Bulls need to get over that if they have any shot of continuation. Should they fail to do that, I'm going to be looking for supports. Right now, those supports are 242.37, 240.37. That's a lot of numbers. Have a good day.